Imagine spending $200 billion trying to crush a country's economy, only to watch that same country come back stronger, richer, and more powerful than ever before. That is exactly what happened when China tried to bring Australia to its knees. And the result? A complete and total disaster that Beijing never saw coming. We break down the biggest economic battles shaping our world. And today, we are diving deep into one of the most embarrassing economic defeats in modern history. If you find this story as fascinating as I do me a quick favor and hit that like button right now. It really helps this channel grow. And while you're at it, subscribe and turn on those notifications so you never miss another deep dive like this one. Now, let me take you back to the year 2020. The world was already dealing with a global pandemic. Supply chains were breaking down and tensions between nations were rising fast. But something else was brewing quietly in the background. China was about to launch an economic war against Australia. A war that would cost Beijing hundreds of billions of dollars and leave Chinese officials scrambling for answers. You see, Australia had done something that made Chinese leadership absolutely furious. Australian officials called for an independent investigation into the origins of CO-19. They wanted transparency. They wanted answers. And China saw this as an unforgivable insult. Within weeks, Beijing started rolling out trade restrictions, tariffs, and outright bans on Australian products. Wine, barley, beef, coal, lobster, timber, cotton, and more. The message was crystal clear. Cross us, and we will destroy your economy. Chinese state media was celebrating. They called Australia a piece of gum stuck on China's shoe. They said Australia would pay a heavy price for its arrogance. They predicted economic collapse, job losses, and a desperate Australia, crawling back to Beijing, begging for forgiveness. But here is where the story takes a dramatic turn that nobody in Beijing expected. Australia did not beg. Australia did not collapse. Instead, Australia did something remarkable. They adapted, diversified, and found new markets faster than anyone thought possible. And while Australia was busy rebuilding its trade relationships, China was quietly bleeding money at an alarming rate. Let me explain exactly how this happened and why China's $200 billion gamble turned into one of the biggest economic miscalculations of the 21st century. First, let us talk about iron ore, the lifeblood of China's construction and manufacturing industries. Australia is the world's largest exporter of iron ore, and China imports more iron ore than any other country on earth. Here is the problem for Beijing. They cannot simply stop buying Australian iron ore. There's literally no alternative supplier large enough to meet China's massive demand. Brazil comes close, but their supply is inconsistent, and shipping costs from South America are significantly higher. So what happened? Even while China was punishing Australia with tariffs on wine and barley, they had no choice but to keep buying billions of dollars worth of Australian iron ore every single month. In fact, during the height of the trade war, Australia's iron ore exports to China actually increased. Chinese steel mills were paying record prices for Australian iron ore because they had nowhere else to turn. Every single day, massive cargo ships loaded with Australian iron ore were sailing into Chinese ports, making Australia richer, while Chinese construction companies paid premium prices. This is where the $200 billion figure comes in. Economists estimate that China overpaid by roughly $200 billion for iron ore and other essential commodities during this trade war period. That money flowed directly into Australian government coffers and Australian mining companies. It was the exact opposite of what Beijing intended. But the iron ore story is just the beginning. Let us talk about what happened to all those other Australian products that China banned or restricted. Australian winemakers were initially devastated when China slapped tariffs as high as 218% on their products. Chinese consumers had been drinking Australian wine in massive quantities, and suddenly that market disappeared overnight. Wine producers in regions like Barossa Valley and Margaret River faced an existential crisis. But here is what happened next. Australian winemakers pivoted hard. They looked at markets they had previously ignored. The United Kingdom, the United States, Southeast Asia, the Middle East. Within 18 months, Australian wine exports to the UK jumped by more than 30%. Exports to the United States surged. New markets in Vietnam, Thailand, and South Korea opened up. And these new customers, they were not going anywhere. Even if China lifted its tariffs tomorrow, Australian winemakers have built lasting relationships with buyers around the world. The same pattern repeated across nearly every industry China tried to punish. Australian barley farmers found eager customers in Saudi Arabia and other Middle Eastern countries. Australian coal found new buyers in India, Japan, and South Korea, countries desperate for reliable energy supplies. Australian lobster, which had been flowing into China for luxury dining, found its way to high-end restaurants across Southeast Asia and even back into Australia's own domestic market. Meanwhile, something else was happening that made Beijing very nervous. Other countries were watching this trade war closely. They were taking notes, and many of them started quietly reducing their own economic dependence on China. Think about it from the perspective of a small or medium-sized country. If China could do this to Australia, a wealthy nation with a diversified economy and strong institutions, what could they do to someone smaller? Countries like Vietnam, Indonesia, and even European nations began accelerating their supply chain diversification strategies. They started looking for alternatives to Chinese manufacturing. They began strengthening trade ties with countries that would not use economics as a political weapon. This is what economists call the reputation effect, and it has cost China far more than the $200 billion they lost in the Australian trade war. Every country that now thinks twice before becoming too dependent on Chinese trade represents lost future revenue for Beijing. Now, I need to share something even more fascinating about this story. China's own consumers suffered tremendously during this trade war, and many of them had no idea why. When China banned Australian coal in late 2020, they created an energy crisis within their own borders. Chinese power plants that had been burning high-quality Australian coal suddenly had to switch to lower-quality domestic coal or more expensive alternatives. The result? Power shortages, factory shutdowns, and increased pollution. In some Chinese cities, streetlights went dark and elevators stopped working because there simply was not enough electricity to go around. Chinese citizens were told that Australia was the enemy, that these shortages were a necessary sacrifice for national dignity. But the reality was much simpler. China had punched itself in the face while trying to slap Australia. The Australian coal industry barely flinched. Japan and South Korea, both hungry for reliable coal supplies, immediately stepped in to buy what China was refusing. Indian power plants signed long-term contracts with Australian coal companies. The coal kept flowing, the money kept coming, and Australia's coal. Miners kept their jobs. Here at My Future Trend, we always try to look at both sides of every economic story. So, let me be fair to China for a moment. This trade war was not a complete failure for Beijing in every single category. There were some short-term victories. Some Australian farmers did suffer genuinely painful losses before they found new markets. Some small businesses that were entirely dependent on Chinese customers did close permanently. But the overall picture is undeniably clear. China's attempt to use economic coercion against Australia backfired spectacularly, and the lessons from this trade war are still being studied by governments and economists around the world. Let us talk about something that really matters for anyone watching from the United States or Europe. This trade war between China and Australia offers a preview of what could happen in other economic conflicts, as tensions rise between China and various Western nations. The Australian example shows that economic bullying does not always work, especially against countries that are willing to adapt and diversify. The United States has been carefully studying Australia's playbook. How do you reduce economic dependence on China without crashing your own economy? How do you find alternative markets and suppliers? How do you maintain political independence while still benefiting from global trade? Australia essentially became a test case, and they passed with flying colours. Their economy grew by more than 9% in the 2 years following China's trade restrictions. Unemployment dropped. Budget revenues increased. And perhaps most importantly, Australian public opinion hardened against closer ties with Beijing. Polls show that Australian trust in China has collapsed to historic lows. Where once there was talk of closer economic integration, now there is talk of further diversification and reduced dependence. China's trade war achieved the exact opposite of its intended goal. Instead of bringing Australia closer, it pushed Australia firmly into the Western camp. This brings us to the current situation, which is arguably even more embarrassing for Beijing. In 2023 and 2024, China quietly began lifting many of its trade restrictions on Australian products. Wine tariffs came down, coal shipments resumed, barley started flowing again. Why? Because China needs Australian products more than Australia needs Chinese markets. Chinese consumers want Australian wine. Chinese steel mills need Australian iron ore. Chinese power plants benefit from Australian coal. The economic reality is simply more powerful than political posturing. But here is the cruel irony for Beijing. Even as China removes its restrictions, many Australian producers are in no rush to return. They have spent years building relationships with new customers in new markets. They have invested in marketing and distribution networks outside of China. They have learned the hard way that relying too heavily on any single customer is dangerous. A winemaker in South Australia told reporters recently that China burned them once and they will never forget it. They are happy to sell to Chinese customers again, but China will never again be more than 20% of their business. A protective mentality is now widespread across Australian industries. The numbers tell the full story. Before the trade war, China accounted for roughly 40% of Australia's total exports. That number has dropped, and it continues to drop even as restrictions are lifted. Australia's trade with India is booming. Trade with Southeast Asian nations is at record highs. Trade with the United States and European Union remains strong. China is still an important trading partner, but they are no longer the dominant force they once were, and that represents a permanent strategic loss for Beijing that no amount of lifted tariffs can reverse. I want to take a moment to discuss what this means for the global economy moving forward, because the implications are enormous. The China-Australia trade war demonstrated that economic interdependence is not a one-way street. For years, there was a theory that smaller countries could not afford to cross China because the economic punishment would be too severe. Australia proved that theory wrong. Now, countries around the world are recalculating their risk assessments. If Australia, with its relatively small population and geographic isolation, could survive Chinese economic pressure and come out stronger, then perhaps other countries can too. This is causing a slow but significant shift in global trade patterns. Multinational corporations are rethinking their supply chains. They are adding redundancy. They're spreading their manufacturing across multiple countries rather than concentrating everything in China. This trend was already underway before the pandemic, but the Australia example accelerated it dramatically. For China, this represents a long-term existential challenge. Their economic model depends on being the world's factory, on having countries so dependent on Chinese manufacturing that they cannot afford to challenge Beijing politically. But if countries start building alternatives, if they start spreading their economic eggs across multiple baskets, then China loses one of its most powerful tools of international influence. The $200 billion China lost in the Australian trade war is almost a rounding error compared to the trillions of dollars at stake if the world continues diversifying away from Chinese economic dependence. So what happens next? This is where the story gets really interesting, and I would love to hear your thoughts in the comments below. Some analysts believe China has learned its lesson. They will be more careful about using economic coercion in the future because they now understand it can backfire. Others believe China will double down, that they will try even more aggressive tactics to maintain their economic leverage over smaller nations. Australia, for its part, seems committed to its diversification strategy. They are signing new trade deals with countries across Asia, Africa, and the Middle East. They are investing in new industries that reduce dependence on any single trading partner. And they are working closely with the United States, Japan, and India through forums like the Quad to build a network of countries that can support each other against economic pressure. The lessons from this trade war will shape international relations for decades to come. And we here at My Future Trend will continue covering these developments as they unfold. Before I wrap up this video, I want to ask you something. What do you think China should have done differently? And do you believe economic sanctions and trade wars ever actually work the way countries intend? Drop your thoughts in the comments section below. I read every single comment, and I love having these conversations with you. If you found this video valuable, please share it with someone who would find it interesting. Maybe a friend who follows global economics, or family member who wants to understand these complex issues. Sharing really helps this channel reach more people who care about understanding how our world works. And of course, if you have not already, make sure to subscribe to My Future Trend and hit that notification bell. We post deep dives like this, regularly covering the biggest economic and geopolitical stories that mainstream media often overlooks or oversimplifies. Thank you so much for watching until the end. Your support means everything, and I will see you in the next video where we continue exploring the trends shaping our future.